Hi, this is Dave, and welcome to the weekly market recap closing out the week for Friday, October the 25th, 2013. So I apologize, I wasn't able to get a newsletter out, a video newsletter, or even a text newsletter out last weekend. The weekend was really busy, just got away on me. I apologize for that. For those who maybe believe that their subscription was lapsed for some reason, that was my bad. I just wasn't able to get anything out last week, and I apologize for that. So let's just jump into the markets this week, starting off with the Dow Futures on the daily chart, as we usually do. And I was just reviewing the last video that I put out like 2 weeks ago, and I was looking in that video, I was looking for some kind of resistance to come in and have a pullback. And as you can see, we had we didn't get that at all. We actually didn't get any kind of a pullback at all. These moves, these moves up and down have almost been, just straight line moves. We had a pullback on this day, the fourth day into the rally, but it only came back down to, the 20-period moving average. And then we had, let me just zoom in a little bit here. And then we had this pullback on, let's see, that was Friday, Thursday, Wednesday. And you can see this pullback here was just a minor pullback down to the 8-period exponential moving average, which is this yellow line. So if you notice, these moves have been sort of straight line up and straight line down. So when you see these kinds of things happen, one of the things you notice is that, like, for example, we were anticipating a low coming in somewhere in this zone, right? And then once we actually broke this trend line and we broke the high of this low bar, what you can actually see is, if you notice, like, you can come into the range of the previous day, but you don't close below the low of that day. The same thing here, you came into the range of this day, you don't close below this day, you don't close below this day. So you can see you're holding the lows on a closing basis of the previous day. Here you were in the range here, but you didn't close below this low of the previous day. Same thing here. You tested these lows for a little bit here, but ultimately each day you closed above the low of the previous day. So you still got that situation going on there. And I think at this point in time, I have a hard time getting into these moves because they're just, up, up, up. I like to see this kind of action where you get a pullback into, let's say, a trend line, or, you're trading like this, and then you get a nice pullback into a 21-period exponential moving average or something of that sort, like back in here. So I like to see those kind of pullbacks in order to get continuation back up to the high side. I don't like these straight moves. I always have a problem getting into them. So I think at this point in time, the first sign that we're going to get a pullback is, like, when you get this kind of situation and then you close below the low of that day. So if we get a bar where, let's say, we do this, and then the next bar we actually close below the low of the previous bar, I think that's going to signal a potential pullback area, and then we can start looking for pullbacks. Until that happens, the market's just going higher, higher, higher. So I don't know if we're going to get a test of these highs before we pull back, or if we're going to pull back first. So that's something that I'm looking for. I don't really want to try to predict what's going to happen here. I just don't really know. One thing I do know, the evidence in front of us, is that, we're still net bullish on the MACD. We crossed the zero line. But if you look at momentum is overdone. Now, in markets that really trend well, you're going to get momentum, overbought for quite a period of time. So that's a possibility. But at this point in time, I mean, we are overbought on the slow stochastic. So I wouldn't look to get in this move up here because of that. I like these moves down here. So I will just kind of highlight that. Let me just highlight that with, we're a little bit overdone on momentum there. And I mean, essentially that's what we're looking at. So I'm still net bullish on the stock indices. That being said, I'd like to see a pullback to get into the move. Once we get some action above here, a good pullback area for me might be, you've got this 21-period moving average moving higher, and then you get this kind of a move here where you're trading above it, and then you get a quick move back down into this rising 21-period moving average. You hold that level, looking to get long, and then continuation. So that's what I'd be looking for. at this point in time. If you notice the Dow, we're going to flip over to some of the sister indices, but the Dow is still above its highs here, the highs that it put in here back in the middle of September. And if you look at some of the other indices, they're above their highs. So where do we think this market might go? We'll flip over to those markets just to see the comparison, and then we'll flip back. So if we look at the S&P, if you look at the S&P, look at the S&P. It's done, this where it's broken this high, and it's above its recent highs, or its all-time highs rather. So the S&P is at all-time highs, and if you look at the Nasdaq, I think it's the strongest index. The Nasdaq is above its all-time highs, and it's printing, even on Friday, new all-time highs again. So momentum is overdone on all of these markets. I think the safe trade would be some sort of a pullback. I'm not sure where these markets might pull back to. You've got some obvious trend lines. You've got trending action to the high side. I don't see any major divergences, at least in the Nasdaq. Let's go back to the S&P. I don't see any major divergences in the S&P. Let me just change the scaling on the MACD. Not sure why it got out of whack there. So let's go back to the Dow. In terms of the Dow, I mean, we were talking about some potential targets in the Dow going back, in 2 weeks ago. So if we look at, we've got a pretty well established range here, and if you look at the a measured move off of this range, if we break the high, I'm going to have to just put that there and redraw it because there's not enough room on my chart. But if you look at, let me just redraw this. Apologize. Okay, so let's look at a measured move. Where did you go? Okay, let's look at a measured move of this range, and you project it off of the breakout of the high. That brings you up to 16,661. And then if we jump over to the Darvis squeeze setup that we were looking at a couple weeks ago, if you look at the weekly chart, we're looking at targets of about 16,400. So I like that area in the Dow, 16,400. I'm talking, macro. I'm talking going out, 2, 3, 4, 5 months into the future, at least 6 weeks. So that's sort of what I'm looking at. We've got our Darvis squeeze here, came down, it tested the lows of the weekly chart. Once it comes back up through the high at around 15,532, then you've really got 16,400 potentially in play. So that level, looking at that level and looking at the confluence between that level and a breakout of this range and a measured move off of that range, 16,400, 16,661. So I like that zone somewhere in there. I'm going to mark that. I'm going to mark it on this chart. Potential targets as high as, let's just split the difference and call it 16,500-ish. So that looks like a pretty good level that we might come up and look at, several months down the road. That's pretty macro. In the near term, I think we're going to have to come up and retest these highs. I think we're getting pretty close to an intermediate high here in momentum. So I would expect maybe a test of those highs and then a pullback. Not really sure at this point in time. So that's my macro view, though, and take it for what you will. Let's take a look at the dollar index. So the dollar index has just been getting smoked. The dollar index is into longer-term support around 79.28. We came down and tested that level, and I've got that level on my chart for a reason. We must have that, there we go. 79.28 is in this congestion area. I think the next major level is going to be down somewhere around this level down here. Let me just see here, make this thicker. So these lows come in somewhere around 77.40-ish, 77.34, half. So that's kind of what I think we've got going, or where, that looks like where the dollar index is heading. And if you look at it from a number of different perspectives, like you have, these kind of rounded top moves. And if you look at a measured move, or you look at let's look at a couple different data points. If you look at a an extension off of that high to low. You look at a 1272, a 1618. A 1618 would bring you into 7821. And if you look at a measured move of, this high, this low, and then projected off of that level, that will bring you all the way down to 7664. And you've got levels that coincide, down there. So I think 7822 to 7663, I think over the long term are in play. There's no reason to believe that the dollar index is, going to change its trend until and if it actually comes up and breaks above that trend line. So we can get if you look at the momentum here, we're buried to the downside in momentum. So we would expect at least a bounce from these levels. But I think as long as we hold below that trend line, I think ultimately we're going to sort of stair step our way down into some of these lower levels. I hope that makes sense. Let's take a look at the euro. So the euro, just keeps going higher, higher, higher. It's broken above $1.37, which was a level we were talking about. It went all the way into $1.38, $1.38.28. So I think at this point in time, the trend is still higher, but we're really overdone on the momentum. So I'm not really expecting a lot of upside potential there. I'm expecting some sort of a pullback at this point in time. So how deep will the pullback be? I don't know. It could come all the way down to that trend line. It could come down to the 21 exponential moving average. I just think it's a little bit overdone at this point in time and due for a pullback. You've got some pretty narrow range bars here. So the way I would look at that is you've got this doji here. If we break below the doji, then I'd be looking for a pullback. If we actually break above this doji here at 138.28, then I'd be looking for another wide range bar back to the high side, into potentially 140, so $1.40. So it's a tough call, but you could sort of play that off of the range of those narrow range bars, break above, break below, that kind of thing, and that would really establish risk pretty tightly. So if let's look at the USDCAD, and the USDCAD is a pleasant surprise. You can see that. Let me just draw a trend line in here. You can see that we're holding these lows here. I was looking at this level right in around dollar. Let's call it $1.04, $1.04.5, and right in around that level we had pulled back, and it was looking a little bit negative, and then we caught a bid, and we're back into almost $1.04.5. So at this point in time, I would really like to see, I think the major resistance is going to be somewhere in and around that trend line. So if we can get up to, let's say, this trend line, a test of this trend line makes sense. Maybe another 50 ticks, 50 pips higher, get into $1.05, and then see if we can get through $1.05. We're setting up a nice little triangle here. This is actually turning out to be a nice little triangle pattern. And if we can break this triangle pattern, then what I'd be looking at were these, these older term targets between $1.08 and $1.09, $1.10. So if we break this triangle to the high side and we actually look at an extension or a measured move of the triangle according to Bulkowski sort of methodology, you could be looking at, almost $1.09 there. So I like that. I like it a lot. I've been cautiously optimistic on the USDCAD for quite some time. Just got a call coming in there. I just need to pause this video for a second. Okay, sorry about that. I got a bit of an emergency call. I'm going to have to wrap up this video pretty quickly. So let me just go through a couple of other instruments really quickly. Let me go through natural gas. Natural gas holding support. Looks like it's going to break out of a potential triangle here. You've got this sort of action happening here. I'm more bullish than I am bearish on natural gas, and I think if we break out of this triangle here, we could make it all the way up to like 424-ish potentially. So let's look at crude oil. Oops, crude oil. Crude oil, I think we found a long-term support area, and I believe that crude oil is going to probably hold these lows, push back up to potentially $100 a barrel. It's kind of what I'm looking at. Let's take a look at, let's see, natural gas, crude oil. Let's look at gold. Gold has been really You know, gold came into a 618 retracement area. Let me just delete this. Not sure. I lost a lot of stuff on my charts, so I'm not quite sure what's going on there. But anyways, we've got this 618 of this low to this high held. It was starting to look like gold was going to be a short and come down and retest these lows. It actually caught a bid. It held this 618 area, which is pretty bullish, and it broke that trend line. So I think at this point a retest of, let's say, 1400 looks like a possibility. A retest of 1434, which is the high of this move, looks like it might be a real possibility. So I think gold is kind of flip-flop from bullish to bearish. Having said that, momentum's overdone. You know, read into that what you will. It's a little bit overdone. It might need to kind of reset itself and then potentially move higher. As long as we hold this swing point low, I think, you know, that's where I'd be leaning towards. Let's look at silver. Silver looks basically the same. Let's look at copper. Copper just looks sideways to me. So I think I've covered most major markets. Let me just look at the bonds. And if I haven't, I apologize. The bonds have been really strong off this double bottom. And I think that at this point in time, this is the 30-year. Let me just look at the 30-year and the 10-year, and then I really need to wrap this up. So let's see, a 50% retracement would bring us all the way into 137, and then 618's around 140. So at this point in time, I think I'm really surprised by this. I was expecting interest rates to go higher. Interest rates move opposite the bonds. I think that, you know, the bonds have caught a bid. Interest rates are going to stay low, at least for the time being. And as long as we hold, let's say, this trend line here, I think we have the possibility to retest some of these higher levels. And then you've got some major levels coming in around 140 and 25, 30 seconds. The 10-year at TY, oops. That's not the 10-year, sorry, that at TY. So same sort of situation. The 10-year is looks a little bit stronger, and you're right into that resistance zone. So as long as we hold this trend line, I think it makes a lot of sense that these are going higher, but we're right into resistance with momentum sort of topping out. So I think a short-term pullback makes sense. So that's all I have for today. Sorry I have to cut this short. Good trading, good investing. We'll look forward to seeing you at the next event we're going to be involved with is the CSTA Oakville on November the 13th. And that's going to be a really good meeting. Stay tuned for the announcement. I'll be sending that out to all the lists, all the groups that I work with. So stay tuned for that. Look forward to seeing you at the next update or at an upcoming meeting. Good trading. All the best.